Here's what more than 50 skilled investors have to say about the markets right now. What is up guys, my name is Matthew and welcome to my channel. This week I went to the Quinnipiac G.A.M.E Forum that was hosted online, and this is one of the largest financial conferences in the world. Usually it's in New York, but this year we had to adjust and everything was just kind of online through Zoom. During this conference, I got to see a lot of people's perspectives and how they think about the markets overall as a whole. I got to listen to other people's investing strategies and see which one's going to be the best for this year of 2021. I really liked how they showcased the whole event, and it kind of really felt like you were there. There were booths and there were like animated pictures on the screen for you, so you can click anywhere. It's like you're kind of walking through this auditorium. It was kind of cool. The first room that I joined was actually about the global economic outlook for 2021. Now, there were so many other people sharing their ideas and sharing their thoughts about the global situation at the moment. The panelists mentioned that in the USA, there is expected to be a 7% GDP growth. Now, along with that, we're supposed to see a K-shaped recovery as well as a recovery that is faster than other countries. In China, they stated that the recovery may not be as fast, and we have seen less vaccinations in China than we have in USA, so they might actually just open up slower than other countries. In Europe, the Middle East, and Africa, there's expected to be a slower recovery, but we're still likely to see that recovery sometime this year. I totally agree with the panelists when they said that rebounding and recovery is two different terms. A rebound just means that we're back to where we were, where pre-pandemic levels were, and a recovery just means that we're actually exceeding those pre-pandemic levels and actually doing better. Later on, they mentioned the I word, and that I word is inflation. Inflation has been low throughout the past few years, and we've really seen economists really fail at predicting what inflation is going to be for this year, next year, and the year after that. The question always comes, can firms raise their prices? And if there's no inflation, firms can't really raise those prices. US exports don't even have pricing power. But then they mentioned here's what the Fed might have to do and here's when they might have to do it. They mentioned that the Fed might have to do some tapering, and that might be sometime next year. So this is what we've come down to, and it's really come to this. Within the US, we've seen a lot of wealth inequality, and that's the younger workers that are the last in and the first out. So these workers are really the ones that are replaceable and are the first ones out in the event that the company can't support any more workers. To end off this first call, they talked about Bitcoin and the housing bubble crash. They stated that Bitcoin was actually a bubble that was speculation and fueled by excitement by retail investors. They even noted that Bitcoin is the worst monetary tool. I'm just quoting from them. They mentioned that Bitcoin is filled with investors that are from chat rooms and just typing up the Bitcoin and just, throwing their money at it. So here's what I actually like about what they said. Recently, everybody's been getting stimulus and everybody's been getting these payments, and it's all going to the bank. Now, what's going to happen when the world opens up again? We're going to be able to spend that money, but we're going to have to see what we spend it on, or if we're actually going to keep it in the bank. So we have to see if we're going to spend it on goods and services, and likely if we do, maybe the economy will get better. So I think that's one of the biggest things that we're looking at in the future, and seeing if people will just spend their money. The next call that I went into was actually about investment strategies. Now, the first thing they talked about was about portfolio balancing and what we should do for our portfolios. They stated that we should diversify among all assets and just rebalance our portfolio here and there. They stated not to chase strong performance and just to add into weakness and trim into strength. Now, by doing that, we'll be able to just cut down on what we're up on and limit the downside, what we're down on. So if you're running a big portfolio, then you'll just be able to balance it here and there. One of the panelists mentioned that there was too much money inside our economy, and with more money in our economy means higher taxes. So the first part of the year for 2021 might be easier, whereas the second part of the year might be a little harder. He stated that we should shift our portfolio towards international and more cyclical plays. The reasoning behind this is because when you give people money, they're likely to spend it. He even mentioned that the low-income earners are likely to spend on food, clothing, and even healthcare. Now here's something that they said that I don't really agree with. They said that Bitcoin is one of the biggest bubbles in the world and it's totally fake and it's not real. And I was kind of just sitting there like, really? I mean, everyone has their opinions and I respect that. Now, the argument that they had as to why Bitcoin doesn't exist is because you can't touch it. Now, they said that as for gold, you can actually put it on your desk, you can give it to your spouse, you can give it to your family. But the thing is, for Bitcoin, what can you do with it? That's what they were saying. But I don't really agree with that, but just let me know your opinions down below. Later on, somebody asked a question about quant trading and algorithms. Now, the panelists were actually against quant trading, and they were just saying that fundamentals are always going to be there, and you're going to need a human to do fundamental analysis. They stated that trading in the market actually adds volatility, and it's kind of unnecessary volatility that we don't really need. Now, we invest in the stock market for one reason, and that's to give money to the corporations so they can grow that money for us and give us a return for our investment. Now, later on, somebody asked a question about cryptocurrencies and corporations. Someone brought up Tesla buying Bitcoin, and these panelists didn't really like that because When a company buys Bitcoin, there's the risk that they can get sued because Bitcoin could crash and then someone gets sued for negligence. Now with that, it wouldn't really be good to be sued, but in addition to this and what they had to say, they actually mentioned that how would credit agencies actually loan you money and how would they see Bitcoin as a risk to your financial standing as a company. One of the negative things of having Bitcoin on the balance sheet was that the company is not going to be as focused and as driven for their vision and their business model. Now these panelists were actually pretty interesting and it was pretty cool to see other people's perspectives. Now the third call that I went to was about portfolio management and risk. Now one of the things that I wanted to highlight from this segment is the ESG that they mentioned. Now ESG just means environment, social, and corporate governance. So by a company having good ESG, it just means that the company is doing good things with their capital for the environment, for the society, and just really making good decisions and being transparent with their investors and the world. Now there's no standard to what is a good ESG policy for a company and what's a bad ESG for a company in the United States. They stated that if a company is going to be good at ESG, they're likely going to be good at other things like driving their business and driving the growth for their business as well. Next, they mentioned factor investing, and this just means you have to invest in different factors in the market like value and growth, etc. Now factor investing is kind of difficult because you have to establish a long-term goal and you have to really know what you want and you have to detect these drivers and what's going to drive these factors. They stated that two of the biggest factors that are going to drive the market will be value and momentum. Now they stated that healthcare is a rising sector that money is going to be plowed back into it. Now with money being reinvested back into healthcare, we could really see long-term growth where demographics actually just drive healthcare. Some of the risks that they said were how do we address the rising costs of healthcare as a whole? And then they talked about value versus growth investing, and if you're going for the value approach, you're kind of going for a Warren Buffett approach where you're looking as a business for how much cash flow they can produce. You're really looking at the intrinsic value of a company versus the market value of a company. With the lower price to book ratio, you're looking at a value company, and with the higher price to book ratio, you're looking at a growth company. Now one of the things that they stated for growth is that you're looking at a long-term horizon, and for value, you're looking at more of a short-term horizon. If valuations are high and you're worried about volatility, then they recommend that you go into value plays and go for value stocks. Now they expect that we'll see slight overweight in value companies as the economy reopens and everybody's back to normal. Now after this, they mentioned SPACs, which have been the hot topic in the market so far. They mentioned that SPACs are actually not here to stay and that there is an expected lower return for these companies that you would be investing in. After all, they're not an operational company and they're just a company that holds cash. Some of the hesitations with SPACs are that there's too much information and some of the information can be false, and there's too much cash that this company is holding that there's not enough things to buy with it. Now going to the fourth call, this fourth call was about asset allocation and investment strategies for 2021 and beyond. They mentioned things that we've already seen before like rebalancing a portfolio and just investing in cash flow businesses. There are long-term worries about debt and we kind of have to ask ourselves, will the dollar retain its value? And if the dollar doesn't retain its value, then we have to look at other investments to put our money in as a hedge for inflation. They say that the next 10 to 15 years is going to change a lot and you just have to be ready for the new technology. They gave us 4 steps for higher success and achieving your goals. The first one is find what you're good at and stick to them. The second one is a growth phase where you're practicing your skill every single day and just getting better at it. Third is skills realization, and that's when you figure out that you're good at something and then you could teach someone else these skills that you've learned over time. Now by teaching other people, you'll be able to share your knowledge and you'll be able to empower others as well. Now the fourth is skills renewal, and this is the always never stop learning, and by never stopping to learn, you're just going to be learning new things that you could teach other people, and by the time that you've grown a great amount of wisdom, you'll be able to spread that wisdom and just spread wealth overall. They stated that you should have a mentor and that you should have somebody to guide you through all your processes and just someone that you can go to for help. Now later on in this call, they shifted to valuations and how to value a company. These panelists stated that you want a high quality business with high cash flow. You really want to think about how much depreciation and amortization that these companies have. You then want to look at the long-term return on equity. Now likely there's going to be a trend in the ROE, and if it's a positive trend, it's a good thing. Now that will give us an indication of how the business will perform as time goes on. In addition to this, you want to make sure that you're looking at the gross margins to see that they're healthy, and you really want to look at the gross earnings as a whole for the company. Now going into the fifth panel, they talked about the pros and cons of active and passive management. Off the bat, they stated that you should have a mix of both active and passive investments in your portfolio. Now 70% of your portfolio should be active and 30% of it should be passive. And for your passive investments, you really want to look towards ETFs that are going to track some kind of index or something over time. As for your active investments, you want to make sure that you're looking for companies that are mispriced by Wall Street, and you want to make sure that you're picking up these companies at the best prices you can. can. Now, one of the panelists in this call mentioned that you should have 4 buckets. The first one being 10% liquidity, and this should be just quick cash flow. The second should be 20% of income generating assets for your portfolio. Now, these are going to be your stabilizers for the portfolio, and these should just generate some steady cash flow over time. Then the third bucket is growth, and you want to look for volatile stocks that are going to grow as time goes on. Then the last bucket is you want to look for alternatives or real assets that are going to steadily increase over time. Now, the goal here is just to beat inflation by 3 to 5%, and you really want to make sure that you're actually beating that, because then you'll be a profitable investor at the end of the day. In addition to the ETFs that were mentioned before, another panelist mentioned that ETFs, when you're looking to ETFs, you want to look for low debt and a great management team that's running that ETF. And when you're looking into individual stocks, you really want to make sure you're looking into a high quality business that has a strong balance sheet, and they don't necessarily have to pay dividends all the time. Now, they recommend that for risk adverse investors, you really want to make sure that you're throwing your money into growth stocks and you don't really have to worry about inflation over time. They mentioned that you should also own corporate bonds, which should give you a higher yield than inflation. And along with this, you can hedge your positions by investing in real estate. Now, one of the biggest takeaways that they mentioned was how should younger investors prepare for getting into this whole stock market game. They mentioned that young investors should be studying the market and studying the psychology of the market overall. Along with this, we should study the reactions to the market and just kind of know what's going to be an overreaction or underreaction based on what the market has given us. And lastly, they mentioned that you should have a long-term view on your investments, and you should not let short-term volatility dictate your investment thesis as a whole for what you're investing in. Now, the 6th panel that I went to was about commodities and cryptocurrencies as a whole and how the outlook is for 2021. I'm gonna be honest, this one, my notes are kind of short because I was kind of getting tired at this point. It was pretty late. They mentioned that recently we've seen a lot of digitalization of money, and a lot of the things being traded are stablecoins. They mentioned that Tether, the cryptocurrency, has been twice as much traded as Bitcoin has, which is pretty remarkable. We've seen a lot of trading, not out of the US, but actually out of China. Now, the panelists made a guess that the government will actually have to regulate cryptocurrency and eventually use it. He mentioned that we should allocate to Bitcoin and not trade it, because we don't know the short-term swings of Bitcoin and how much it can move up or down. One of the concerns that they had was, how are miners going to be paid in the future? And are they going to be paid with cryptocurrency, or is it going to be another currency that we're going to pay them with? Something that was brought up was Tesla having Bitcoin on their balance sheet and actually taking Bitcoin as a payment. Now, this guy's a super bull for cryptocurrency, and he stated that by having cryptocurrency on the company's balance sheet, it's one of the most prudent things that a company can do. And he thinks that a lot of other companies are going to follow and allocate some of their cash to Bitcoin. There was a concern that another panelist brought up, which would be that Bitcoin cannot be an investment as well as a currency, because if you're buying something with your investment, then what's the true value of it? And I don't know, they just kind of got down this whole rabbit hole of you shouldn't be trading and you shouldn't be using your Bitcoin to buy something if you're going to be owning it as an investment for long term, if it kind of makes sense. Then they talked about crude oil, or WTI, and he stated that crude oil should be worth $50. Crude oil right now is $60 a barrel. So they were mentioning that a lot of electricity will be used for our energy instead of oil. And that's kind of the shift that we're going into for the next decade. Now, the last panel that I went to was about analyzing growth and opportunities in listed options. Here they talked about derivatives and options contracts and how we can use that to hedge our stocks and our portfolio. They stated that you should use options as a hedge because when insurance is cheap, then it's worth buying. Now, to look at when something is cheap, you kind of have to see what the market is doing when nothing is happening versus when there's a lot of volatility and there's a lot of things happening. So you just kind of have to compare those prices and know what's cheap when you're buying these options. However, if you're a long-term investor, it's worth to sell these options and just to create income through these options. Now, they stated that if you're a long-term investor, then you can sell some options, and this should just be a tactic called covered calls. I'm not really going to explain what covered calls are, but you can look them up online. Now, they mentioned that if you're going to go into options, you better have an exit plan and you better know what you're doing. And if the market goes up a lot, you better know when to take profits. And if the market drops, you better have an exit plan to get out and cut your losses. One of the things that they encouraged was to have a paper portfolio and to trade options through that paper money, which is just fake money online. And if you lose it, you're not really losing your real money. And by this, you can just learn the market as a whole, and you could be able to implement different strategies and see which one works the best for you. Now, there's been a lot of growth in daily options volume with Dave Portnoy and Roaring Kitty just being introduced to the market and everybody knowing them. Now, they mentioned that eventually we may not see this options volatility and options volume to increase over time, as, these things might just be a boom and, just a fad. However, they did state that you should add derivatives to your resume because it's really helpful when you're applying for a derivatives job. So take all this information with a grain of salt, and not all these things that I said were facts, and a lot of them were opinions by analysts and other panelists. Now, do I agree with some of the things? Sure, but do I disagree with a lot of the other things? Maybe. But everybody has their thoughts and I respect everybody's opinions. So with that said, let me know if you guys enjoyed this video today and let me know if you actually learned something by not going to this conference that you would have to pay for. I hope I saved you guys some time and money, and I hope that you guys learned a lot. Now, if you could please hit that like button down below just to help out the channel. It really helps out, and I really appreciate it all. Don't forget to subscribe for more information and more news about the stock market and just stocks in general. Please don't forget to subscribe and just make sure that you're turning on those notifications so you know when I post a video about investing or business and finance in general. And that being said, thank you so much for your time today, and peace out.